In 1995, a 28-year-old trader named Nick Leeson single-handedly brought down Barings Bank, the oldest merchant bank in Britain. Established in 1762, Barings had financed the Napoleonic Wars, managed accounts for Queen Elizabeth, and held a reputation as one of the most prestigious financial institutions in the world. Yet, in just a few weeks, one man, young, ambitious, and overwhelmed, caused its collapse with $1.3 billion in hidden losses. Nick Leeson's story begins in Watford, a working-class town outside the outskirts of London. His father was a plasterer, his mother a nurse. Money was tight, but pride ran deep in the family. Nick wasn't an academic star, but he had a knack for numbers and a burning drive to rise above his circumstances. After graduating from a local college with modest grades, he landed a clerical job at Coutts, a private bank serving Britain's elite. It was his first glimpse into the world of high finance, a world he wasn't born into but was determined to conquer. From Coutts, Leeson moved to Morgan Stanley, still in the back office handling the paperwork that kept trades running smoothly. His work was meticulous, and he caught the eye of Barings Bank, which hired him in 1989. At Barings, he started as a clerk but quickly stood out. He was efficient, confident, and hungry for more. Within months, his reputation as a problem solver earned him a bigger role. In 1992, Barings sent Leeson to Singapore to help establish their operations on the Singapore International Monetary Exchange. At just 25, he was tasked with running both the trading floor and the back office, a rare and dangerous combination of responsibilities. In most banks, these roles are strictly separated to prevent fraud and ensure checks and balances. The front office makes trades, while the back office records and verifies them. Combining the two is like letting a chef both cook the meal and inspect it for quality. It invites trouble. Leeson was trading future contracts tied to Japan's Nikkei 225 stock index. At first, he was a golden boy. His trades appeared to generate massive profits, and Barings executives in London were thrilled. Leeson was hailed as a prodigy, earning bonuses and admiration, but beneath the surface, things weren't as rosy as they seemed. Some of his trades were losing money, big money. Instead of reporting these losses, Leeson hid them. He used a secret account known as 88888, or the 5/8 account. It was originally meant for minor error corrections, but Leeson turned it into a black hole for his bad trades. When a trade went south, he buried the loss in this account, making it look like everything was fine. This wasn't just a small deception, it was a ticking time bomb. Hiding losses created a vicious cycle. To cover his tracks, Leeson had to make bigger and riskier trades, hoping to recoup the money he'd lost. It was like a gambler doubling his bets after every loss, convinced the next hand would turn things around. For a while, the illusion held. On paper, Leeson's trades were raking in millions. Barings' leadership didn't dig deeper. They saw the profits and assumed their young star was untouchable. By late 1994, the hidden losses in the 5/8 account had spiraled to over $300 million. Leeson was walking a tightrope, and the smallest slip could bring everything crashing down. That slip came on January 17, 1995, when a massive earthquake devastated Japan. The disaster killed thousands and sent the Nikkei index into a free fall. Leeson had bet heavily that the market would rise, but instead it plummeted and his losses exploded. Faced with disaster, Leeson didn't confess. Instead, he doubled down one last time. He placed a massive bet on market volatility, a strategy called a long straddle, hoping a sharp swing in the Nikkei, up or down, would save him. But the market didn't cooperate. It stabilized, leaving his bet worthless. By late February, the hidden losses in the 5/8 account had skyrocketed to $1.3 billion, more than twice Barings' available capital. The bank was effectively bankrupt. Leeson knew it was over. On February 23, 1995, he left a note on his desk that read, "I'm sorry," and fled to Singapore. He bounced from Malaysia to Thailand to Germany, trying to stay one step ahead of the authorities, but his run didn't last long. He was arrested in Frankfurt a few days later. Barings Bank collapsed on February 26, 1995. After 233 years of history, it was gone in an instant. The Bank of England stepped in to manage the fallout, but the damage was done. Employees lost their jobs, clients lost their money, and Barings was sold to ING, a Dutch bank, for a symbolic €1. The once proud institution was reduced to a footnote. The collapse sent shockwaves through the financial world. How could one trader, barely in his 20s, bring down a banking giant? The answer lies not just with Leeson, but with Barings itself. The bank's oversight was shockingly lax. They gave Leeson unchecked control over both trading and record-keeping in Singapore. They didn't ask tough questions about his profits. They were blinded by greed and ignored the risk. The culture of the time prioritized results, and Barings paid the ultimate price. Leeson was extradited to Singapore, where he faced 11 charges, including fraud and forgery. In December of 1995, he was sentenced to 6.5 years in Changi prison, notorious for its harsh conditions. While incarcerated, he was diagnosed with colon cancer. He underwent grueling treatment and, against all the odds, survived. His good behavior earned him an early release in 1999. During his time in prison, Leeson wrote Rogue Trader, a memoir detailing his rise and fall. The book became a bestseller and was later adapted into a film starring Edwin McGregor. The story captivated the public, a tale of ambition, deception, and the fragility of the financial system. It was a real-life drama that exposed how one person's mistakes could ripple across the globe. After his release, Leeson returned to the UK and began piecing his life back together. He started speaking at conferences, sharing lessons on risk management and corporate ethics. For a time, he served as CEO of Galloway United Football Club in Ireland. He remarried, had children, and built a new career as a financial educator. Today, in his late 50s, Leeson remains open about his past. He doesn't shy away from discussing the pressures that led him to hide losses or the mistakes that cost so much. He often says that if anyone at Barings had asked the right questions early on, the disaster might have been avoided. The collapse of Barings Bank changed the financial industry. It forced regulators and banks to tighten oversight and enforce stricter separation of duties. It showed that no institution, no matter how storied, is immune to failure. The lesson wasn't just about one rogue trader. It was about the dangers of complacency, unchecked power, and a culture that values profit over principle. Nick Leeson's story is a reminder of how quickly ambition can turn into ruin. A young man from a modest background, driven to prove himself, climbed to dizzying heights and fell just as fast. His actions destroyed a centuries-old bank, but they also sparked reforms that reshaped finance. His legacy, like Barings, is a warning, one that echoes through boardrooms and trading floors to this day. Thank you for watching. If you found this video insightful, don't forget to like, subscribe, and share your thoughts in the comments. We've got more deep dives coming your way, so hit that bell to stay in the loop. See you next time.